Amazon is one of the companies that's benefiting significantly from the rising effectiveness of artificial intelligence. The company's AWS segment, which generates the revenues from AI services, increased by 19% year over year and has a $115 billion annual run rate. I'm going to talk about that and Amazon's AI ambitions, why it's spending so much money on AI, and the return on investment it expects to retrieve from that spending on AI. I'll also answer the question if Amazon is an excellent AI stock to buy right now. So I'll do that all in this brief video. So let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So, like I mentioned in the beginning of the video, Amazon's AWS segment jumped by 19%. And that's, I think, 3 straight quarters where the company's revenue grew 19% in that segment. That segment is by far the most profitable segment for Amazon. The operating profit margins in the AWS segment have consistently held above 30% for several quarters now, and it's by far, if you compare it to its other segments, the operating margins in its other segments are less than 10%. So it's more than triple the rate of profitability of its other segments. It's critical for Amazon's success for AWS to do well. And Amazon said that it's hard to overstate how optimistic we are about what lies ahead for AWS customers and businesses. So isn't that great to hear for investors? The company's most profitable, most important segment, and the management team's saying it's hard to overstate how optimistic we are about this most profitable, most important segment. That's really great to hear for Amazon stock investors. The company went on to say that most AI compute has been driven by NVIDIA chips, and we obviously have a deep partnership with NVIDIA and will continue for as long as we can see into the future. But sometimes customers want better price performance, and that's why we built our own custom AI chips called Trainium 2, and that just launched. And these chips are typically 30% to 40% more price performant. So for companies not looking for the best leading cutting edge technology and they're looking more for price performance, lower cost, then Amazon's Trainium 2 chips might be for them. And there's plenty of businesses that are looking at this type of chip. And they include companies, big name companies like Adobe, Databricks, and Qualcomm. So Amazon penetrating this massive market, and they're doing so with their own custom silicon chips, and that gives them a couple of benefits here. First, it diversifies itself a little bit against NVIDIA, right? NVIDIA's chips are obviously the best in class, the best total cost of ownership, everything, right, across the board. But that's given NVIDIA so much market power. NVIDIA's products are sold out for the next several quarters, according to NVIDIA's management team. And so when they have that kind of demand for their products, NVIDIA can charge sky-high prices. And if you're not willing to pay that, someone else is. And so it's not safe for a company like Amazon to have that kind of relationship for such a critical piece of equipment, for such a critical part of its business. And so it's good for investors to hear that the company's making progress on its own chips, improving the performance, improving it generation by generation, so that it has some backup there in case NVIDIA starts to really stretch their negotiating power and exercise that negotiating power. Amazon can ramp up production of these chips to counteract that force from NVIDIA. Even though it might not make sense if you look at the situation without looking at the consequences. If you just look at Amazon's relationship with NVIDIA, it still might make sense for Amazon to continue buying NVIDIA's chips and not developing its own chips because NVIDIA is so good at what it does. It might make sense to just outsource to NVIDIA. But as a safety precaution, just to have your risks mitigated to some degree, it's good for Amazon to be developing this technology. Just as a threat also to NVIDIA, where NVIDIA won't feel too comfortable continuing to raise prices and exercise that pricing power because they will know that companies like Amazon and Alphabet and Microsoft are doing the same. They're developing their own chips, and they're not doing so because they think that it's a good investment necessarily compared to buying NVIDIA chips, but they're doing so to keep the risks mitigated, to keep the risks lower, just in case NVIDIA starts to exercise too much pricing power. And so they're already working on the third generation of these Trainium chips, what they expect to preview in late 2025. And they've already got plans for Trainium 4 after that. So this isn't something that they were just testing and it might fizzle away. This is something that they're committed to, and they've already got the next two generations of this technology in development and planned for launch in the coming years. So does that make Amazon an excellent AI stock to buy? Well, let's look at valuation as well. And according to my discounted cash flow model for Amazon, the company's current intrinsic value I have calculated at $286, and the current market price is $232. So according to my DCF, Amazon stock appears undervalued. Now, when I look at the forward price to earnings ratio of 31, it's about in the middle of where this stock has traded for according to this metric going back a year. And then looking at the business characteristics, it's growing in all facets. Its most lucrative segments, the AWS and advertising segment, are growing over or close to 20%. Profit margins are expanding, and it's in a great position to benefit from this rising effectiveness of AI, and it's grown to such a scale for the e-commerce business that the incremental revenue is now becoming more and more profitable because of the economies and scales it's reached. So to answer the question I posed, yes, I think Amazon is an excellent AI stock. In fact, I have Amazon stock rated as one of my top 9 stocks to buy right now. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.